Hey everybody, hello and good morning. My name is Darius Anucauskas and I'm the Chief Market Analyst here at Markets.com. Look, today is Wednesday. Today we're seeing precious metals once again hitting all-time highs. Silver is flying like crazy, honestly. It seems like it's unstoppable and no one can find a ceiling for that one. Look, we'll take a look in all that. We'll see what's happening. We'll compare the precious metals. We'll see what's the situation there. Also, oil is a huge, I wouldn't say problem yet, but certainly a concern. But again, about all that in the webinar right now, so hopefully you enjoy the session, and I'll see you in a bit. Ladies and gentlemen, hello, and good morning. My name is Darius Anucauskas, and I'm the Chief Market Analyst here at Markets.com. And today is Wednesday, the 14th, if I'm not mistaken, the 14th of January, 2026. I have to kind of still get used to saying 2026 instead of 2025. But anyway, look, ladies and gentlemen, welcome to another mad day in the markets. Before we go any further, let's quickly have a read through our risk disclaimer. So yes, the content we produce does not constitute investment advice or investment recommendation and should not be considered as such. This material should not be taken as an invitation to acquire any financial instrument or product. I'll give you a few seconds to read the rest. I'm not going to disappear anywhere. Oh, by the way, I'm going to do my usual good morning in the chat room. Good morning, everyone, ladies and gentlemen. Yep, I have to remind everybody as well again that look, this session is made for you, because if you want to participate in a live session, that would be great, especially if you want to ask some live questions or questions during the live session, because again, if we can have like a nice little conversation, we can have a nice little dialogue about the markets. If you have anything to say, I'm more than happy to hear you out. Of course, if it's relating to the markets. But yeah, ladies and gentlemen, feel free. If you're watching this as a recorded session, don't worry. I mean, you can always leave a comment below and I can pick up on that one and come back to you in the next session. So yeah, ladies and gentlemen, we'll pick up at what's happening with the financial markets today, what could happen tomorrow, what was happening yesterday. Before we go any further as well, just a quick mentioning of our Markets.com website, which you can always check out for more information about us. If you have any questions, reach out to us. We'll be more than happy to assist. Ladies and gentlemen, let's jump into the economic calendar. Let it update a little bit. So this morning, we received some data from China, actually. From other regions, it wasn't that important probably, but the trade balance, the Chinese trade balance came out. Now look, I was kind of, to be honest, I have to admit, I was really expecting this one to be a little bit on the lower side, but hey, another beat. Wow, exports increased 6.6%. Let me just see if there is a chart here. If I can see this one, switch to monthly. There we go. Yes. So, okay, exports are quite stable right now, I would say, Chinese exports, floating kind of in the range between kind of 0 and 14. So this is what I can see here. And that has been for the past kind of 2 years, something like that. Or actually a year and a half, probably more accurate. But look, for now, we're keeping an eye on this because again, there's a lot of problems happening. I think that what's gonna, what are they trying to do right now? Everybody's trying to ramp up all the trade at this point because nobody knows what what will the leader of the top economy will do with Iran, because again, I think most likely there will be an invasion. If so, then well, you need to kind of understand the consequences, and this is where I'm going to pick up on when I'm going to jump into commodities, I'm gonna pick up on that a little bit more. But certainly, we're watching the developments. Nothing will happen during the week. Up until Friday. Normally, I keep on saying that if there is a conflict, normally, or let's say the U.S. decides to go again and bomb somebody, that normally happens during the weekend, because in order not to kind of shake up the markets too much, because recently, from like for the past kind of year as well, we kind of see this tendency where you go on a Saturday, bomb somebody, right, and then of course it shakes up the market. The markets are worried, but then on Sunday you stabilize by a few phrases throwing out here and there, and then we might see a reaction on Monday, but then everybody's like, oh, no, it's all fine, it's all fine. And kind of then but if you would do that on a weekday, if you go bomb somebody on a weekday, then there is a problem, because you might not have enough time to stabilize the stock market, because the stock market might start selling off, especially when you're hitting all-time highs. So yeah, because everybody's kind of waiting for that shorting moment. So that's why, like I said, that's why you go in and bomb somebody on a weekend. It's like, hey, what did you do on a weekend, right? Well, I went to the zoo, but what did you do? Oh, I flew a bomber. Okay. Anyway, so long story short, for now, like I said, it seems like there is this kind of worry that things could escalate further. Despite the Iranians saying that they want to have a conversation, they want to have communication, and this is a fact. They notified the White House that they want to have a discussion, talks, but apparently, nobody cares. It seems like that. Anyway, we'll see how it goes. We'll see what's going to happen next, but certainly it is a itchy subject right now. Going further today in terms of economic data, we are seeing some core PPIs coming out from the US, so this is going to be interesting. Core PPI year on year is expected to come out at 2.7. We don't have the previous number because, again, there was a big mess, if you remember. The mess was because of the U.S. government shutdown, and that's why we are not really seeing something like some previous figures here apart from here. Now look, we have two data sets. Now let me just double check here, and the trading view calendar does not have the kind of the which day, which for which month the numbers are coming out, for. So basically it's going to be October and November. There we go. Yes, the PPIs that we're going to get, they're going to be October and November. So we're missing a few pieces of information here. 2.7, that was the okay, that was the October number. Okay. So we're, the forecast here for 2.7 is for the sorry, not it was an October number. It was 2.7. That's the forecast for the November number. The October number, we don't have a forecast. There we go. But anyway, it's a little bit, data here is all over the place, because on the other calendar, I can see that it's 2.6 here, the October figure. Look, we know that it's a mess, and this is what I said yesterday in my one of my videos here. I said that on Monday I said that there is a problem with data collection. Okay, there is a problem with that, and we really have to be careful with all that Bureau of Labor and Statistics, all those numbers. Yes, they are market movers. However, the fact that there was a shutdown, now there is a problem of the way the data is collected, and if it's actually correct, or and how correct is it. So again, it's all shady. The market needs something to react on, right? So they take it as at face value, whatever BLS is going to spit out. Then the market will say, okay, so wow, although I think deeply the market doesn't trust the data, because it's with all this mess around the government shutdown last year, at the end of last year, that kind of is making the markets worried a little bit. So how much can we trust the data? So anyway, I think that more time has to pass. I think that you're looking for a year until it's kind of stabilized at least, or maybe they will fix all the cracks. So that's why for now we're watching it. But like for example, yesterday we got the CPIs, the US CPIs, right, came out, and inflation rate. There we go, 2.7, the year-on-year headline. The core year-on-year 2.6. Now this is where the market reacted positively to all this, saying that, oh my God, like great, more rate cuts could be seen, and okay, that's the big question is actually, is this gonna happen or not? Because we know that currently there are attacks on Jerome Powell, and he's leaving in April, or actually at the end of April, in May actually he's leaving, and at the moment I think that we were, if there was a little bit of a lower percentage here for a probability to see maybe a rate cut in January. Now it's like just going, I think it's going to hit like 99%, and that's it. But we already knew that it's not going to happen in January. We're hoping to see maybe in April. But with the recent developments, I really don't know if he's going to give that rate cut to them, or maybe like a gesture of goodwill. Here you go. This is my farewell gift to you, the White House. Here you go. There's a cut for you. Okay, maybe this way they can play the game. Now, but at the moment we're seeing this, the percentage for a cut by April is, it's currently sitting at 60 in terms of not having any cuts. So to see a cut, it's around 34. Again, this will shift. I think that we still have plenty of time before April, so I think these two columns are going to shift around here a little bit, depending on what's going to happen with Jerome Powell. Anyway, coming back to the economic calendar here very quickly. Let's let you leave. Yes, let's see here. So yes, inflation. This is what happened with inflation yesterday. Sorry, yeah, on Tuesday. So we're keeping a close eye on it. Again, people are worried in terms of is it good, is it accurate data? So I think more time has to pass, and then maybe they will fix the cracks. But at the moment, yeah, it's a little bit shaky. So in terms of other data today, in terms of apart from PPIs, well, retail sales from the US are coming out, so keep that in mind. And business inventories, yep, few things here and there. EIA crude oil stock change. Of course, oil is a big kind of thing right now, and we are seeing a few speeches from some Fed officials. Okay, so going into Thursday, ladies and gentlemen, look, we're going to have the UK GDP numbers. Look, I'm talking about Thursday because I'm not going to run a show on Thursday. I'm going to jump in on Friday. That's the usual time, and we'll have some export prices and import prices from the US as well, so keep that in mind. Philadelphia Fed Manufacturing Index will be coming out as well. So that's on Thursday. Anyway, coming back to Wednesday and actually jumping into the indices. Look, we're hitting all-time highs. Everything is just flying high. Maybe the market is hoping that there will be a cut. Look, Japan particularly, right? Nikkei. Now here the problem is this, that the yen, the Japanese yen, continues to devalue. So in a way, the short-term gain for the companies is clear, because your currency is devaluating against other currencies, other big currencies, basically making your goods more attractive on the global arena. So your Europeans, US can start buying, Chinese can start buying your goods and services, because again, it's nice, it's cheaper. However, that in the short run, that's great, and this is what we're seeing. Nikkei is rallying; those big companies are enjoying this moment. However, we understand that this is short term, and eventually, when the tides will shift towards the fact that your own people are suffering because of higher inflation, and this is like they cannot, their affordability is falling. When this will catch up, and it will catch up fast, you will see that actually there is a little bit of a problem, and maybe this is when we'll see a reversal to the downside. And at the moment, I think that Sanae Takaichi is trying to boost everything as possible, to win the snap election, because I think she called for a snap election in February, if I'm not mistaken. I need to double check that, but yeah, it's going to be a recent one. And for parliament elections, and she's hoping to win that because she's popular right now. And again, we know the current market activity is just kind of giving her an extra helping hand. And also the fact that the BOJ is kind of sitting and on their hands and waiting right now, because yeah, I think they're going to start hiking a little bit later. But they will have to hike. They will have to intervene somehow, because otherwise, the Japanese yen is just going to go crazy. And we've seen these scenarios happen in the past. So either you have to intervene, or you just kind of wait for the stock market to collapse, because then everybody will start jumping into the Japanese yen automatically, because it's a safe haven. And maybe this way you will fix one problem of devaluation, but again, then if people are losing jobs, then yeah, what's the point of your well, sorry, but there's no point. There is point. There's always a point, but in general, then you fix one problem, but you get another problem that you need to fix in a way, and your productivity drops, and yeah, it's and then everybody has money, but but no jobs, so it's a weird moment that you still sit on pile of cash, but again, everything is kind of dropping, and you're kind of, you start buying, maybe then actually inflation starts pushing back up again, and then quickly the money supply of people diminishes, and everybody starts saving, the money turnaround drops. You get your low productivity moments. Anyway, I think I already spin this too much in my head, this whole economic thing. Look, ladies and gentlemen, for now, like I said, keep your eyes on Nikkei, keep your eyes on the Japanese yen. This is quite important, because look, if the BOJ continues to hike rates, I mean, that could this is where the Western economies should start worrying a little bit, because Japanese money has been the fuel of some major Western economies. I mean, we know the Japanese hold a lot of U.S. debt. If they stopped, buying U.S. debt, like investing in bonds, then then we see a problem, because look, at the moment, the Japanese bonds are a little bit are becoming attractive as well. So let's put it this way. So basically, protectionism will be key. I think a key thing in 2026. Shanghai Composite. There we go. Finally, we're seeing a little bit of a stabilizing moment. It was rallying like crazy. Now it's a little bit stabilizing. So if you're looking for some higher levels on this one, I think you need to just wait for clearance of the current highest point of 2026, and then we could go higher. But at the moment, given that we saw a little bit of a retracement back down, look, I think that there is a possibility to see a larger correction lower. In terms of where we could correct to, well, I will use my beloved Fibonacci retracement, and there we go. We'll see that we already tested the 23.6 beautifully. Boom, there we go. 4,102 zone. Great result here. So if you're looking for some lower levels, I think that a drop below the 4,100 territory would be needed in order to consider a larger correction back down. Let's jump into the US, ladies and gentlemen. So yeah, yesterday, great move here to the upside. Fantastic result. However, initially it was hitting hard here, initially hitting high, and then it got hit hard. Some profit taking was done here, and at the moment, I think what we'll end up in will be the fact that we'll see probably a bit of ranging here on the Dow, unless it's really gonna reverse sharply and clear the current all-time high, which by the way is around, let me just double check, for 49,633. Yes, so yesterday we hit a new all-time high, And was it yesterday? Sorry, no, it was on Monday. Monday we hit a new all-time high, so around 49,633. And I'm talking about the main trading hours, not the the cash index. Probably we'll see the futures. We'll see a bit of a higher number. But anyway, we hit a new all-time high, and yes, we retraced back down. Yesterday we failed to hit a new all-time high. And yeah, we are now, like I said, we could be ranging now. So let's see if this is gonna stick. If you're looking for some lower levels on this one, I would rather wait for maybe for a drop below the upside line here, taken from the low of the 20th of November, and then we'll just kind of take it from there. The S&P 500 very quickly, yes, also a great result here. Pushed yesterday, closed in front, like slightly in the negative zone. Dow was the biggest loser yesterday, to be honest, with minus 0.8%. A move. So look, in general, not everything is lost for the S&P, and in general for all of them, because still there is some upside potential. We can see that clearly, so we're just being a little bit on the careful side. We're not rushing into things. We're seeing Europe right now opening in slightly positive territory, so maybe it might drag, higher as well. So again, at this point, everything is still flying high, despite the issues that we're seeing in the global economy. There could be big problems, and we know that if let's say if there something is happening with Iran, then yeah, this is where China could feel the heat, and we all understand, why there are attacks on Venezuela. We understand why there are attacks on Iran, because again, the whole idea is to weaken China. This is like the U.S. wants dominance, and they don't really want to be the only dominant country in the world, and we need to weaken China, right? So and that's why because you want to cut off China from cheaper oil energy supplies. And we'll see. Well, the most important, what's interesting for me is, like, I want to see what's gonna be the Chinese response if U.S. actually goes ahead and ends up hitting Iran and basically cutting China off the Iranian oil. It's like I said, we're going into a bit of a problematic period, in my opinion. I think 2026 will be full of geopolitical tensions. If the main thing in 2025 were tariffs, now I think geopolitics is going to be the driving force. And honestly, I keep on saying that we humans are not very bright. We keep on creating the same problems, and we keep on repeating the same mistakes. So we're kind of going through the scenario of 20th century right now. It seems like that, the beginning of the 20th century. So we know how that ended. But hey, we're all optimistic, right? NASDAQ, very quickly on NASDAQ. So where we're seeing here, look, if Dow, I'm going to kind of stick to my theory that if Dow and S&P kind of, go and hit all-time highs, NASDAQ kind of follows through eventually. It goes and hits that all-time high as well. The only thing for NASDAQ right now, it needs to overcome this barrier right here, this 25,827-ish zone. If we clear that, then great, more buyers could join in. Forthcoming higher high within this period, from the beginning of December, and then we'll go for like I said, for the all-time high. If we're looking for some lower levels, then of course a break of this upside line here, taken from the low of the 21st of November, would be needed. So if you're looking for some lower levels, then yes, wait for that at least, because at the moment everything's kind of pointing a little bit more towards the upside. The German index DAX, now this one is interesting, and it's currently testing my 25,455 territory again. Now, this level here was one of my targets, because I said to you that, look, whenever we're going for an all-time high, we need to find some sort of logic where it could end up traveling to, and this is where I use my beloved Fibonacci extension. And in this case, I've drawn it from the lowest point of November to the high of the 12th of December, and then to the low of the 18th of December. So there we go, good move here. We tested this area for 25,455. Now we're kind of retracing a little bit lower from it. But look, if it continues to hold, I think that there could be a bit of time for a bit of a retracement. If we clear it and we stay above it, then, well, I mean, honestly, it's kind of opening the door to much higher areas. Maybe 26,000, maybe even above that. But again, I don't want to rush into conclusions yet because we already had quite a decent up move. So yeah, be very careful for now. If you're a bull, then I would say maybe a little bit of profit taking could be, not maybe all of your positions, but a little bit of profit taking here could be nice. The FTSE 100, similar story, all-time high, clearing the 10,158 territory. So yes, we'll see what's going to happen next here. To be honest, we're entering uncharted territory. Maybe 10,300 could be a nice target, but let's not rush into conclusions. Okay, DXY, very quickly on this one. We are kind of ranging right now. I talked about it on Monday as well, and look, we found good resistance near the 99.28, 29 zone here. So if we're looking for some higher levels, a clearance of that area is required. If we can get a nice clearance, then wonderful, more buyers could join in. For the downside, a drop below the 98.76 territory here would be required for me, because previously I looked at it as a good area of resistance. Now it's a good area of support. Ladies and gentlemen, let's jump into the currency world. Look, I'm going to try to run through the instruments a little bit quicker this time, because normally I take around an hour here, but I'll try to run through this quicker. AUDUSD, beautiful movement here. For now, look, I said it before and I'll say it again, I will stick to the this little zone here right now. I need to see a push. I need to see a push through one of the barriers here, and then we'll take it from there. Ladies and gentlemen, just bear with me one moment. I need to fix something here very quickly. Something is wrong here on my side. Let me just bear with me one moment, okay? All right, ladies and gentlemen, apologies for the little delay because, again, had a few issues here. Sorry, things happen. It's a live stream, so unfortunately, like I said, certain things happen, and external things, and you have to kind of deal with that very quickly. Anyway, ladies and gentlemen, so yeah, coming back to the very quickly to the situation here with in the forex world. So what I said before, AUD/USD at the moment, the problem is that yes, AUD is our risk currency, and on the one hand, it should be flying high as well, given the fact that the US dollar is kind of unstable. We don't know what's going to happen with that one, because at the moment, I think a lot of investors are on standby to understand. They don't know what we should we sell USDXY? Should we kind of buy more of it. But what I said to you recently, that even if we look at this from the technical perspective, we look at the prevailing trend. The prevailing trend was to the downside because we're in this range since what? Since around June time, and beginning of June time, and we before entering this range, big range, we we were moving sharply to the downside. So the greater chance for this one, to be honest, would be to the downside. However, again, in the short run, maybe we'll fly high, test the upper side of the range here, and then drift back down. So again, that's where that's why I am a little bit on the careful side with AUDUSD, and I do like it further to the upside, but again, certain criteria still has to be met, and I would rather wait for a push maybe somewhere above the 0.67, 66 in order to go higher. Now, in speaking of our risk currencies, and especially risk on, risk off monitor here, Australian dollar against the Japanese yen. Now this is our tool, like I said, which we when we look at which we look at when we want to understand if the market is in risk on or risk off. We're flying higher. Yes, the markets are positive. We understand that. We can see that ourselves. So it's just kind of confirming to us that thing. But look, the problems with the Japanese yen, I think that they're going to stay for now, and exactly for why, because of what I said earlier on in this video. So yeah, I think that we could still see some weakness in the Japanese yen, and basically for now I'm gonna continue targeting the upside, because look, I think there is a good chance of this one traveling all the way to 109.37 territory. This is the highest point of 2024. We remember this is where we had we had the intervention by the BOJ, and then it kind of worked out nicely. It's the Japanese yen strengthened here, but again, it was a temporary fix for a few years. And now I think that this is where what they're watching, and they're watching this 109 point, this highest point of 2024. If we somehow surpass that, then I think this is where everybody will start sounding the alarm, because at the moment everybody's just okay, we're not at these levels yet, so we can still afford the devaluation of the Japanese yen. And look, the stock market right now is, like I said, also not in favor of the Japanese yen. It keeps on running higher, but of course, be very careful. Keep your eyes on the geopolitical developments. Now let's jump into Euro USD, ladies and gentlemen. So look, I talked about this one on Monday, and basically I talked about this one also in one of my videos on Monday here, starting the week with USD down. Basically, this is a quick little Forex update here that I did, and you can check it out. It was down on Monday. DXY was down, but now it recovered. So, but yeah, it's an interesting one. So check out this video on YouTube on our channel. But for now, what I say that is, look, you have to be very careful again. Like if I think if there are going to be there are going to be bad consequences on China because of the loss of Iranian oil. I think that this is where the euro could suffer as well a little bit, because again, it's Europe depends on Chinese goods, and it's the whole trade could be disrupted a little bit. So yes, for now, I think. For now, we're watching this one. I think Euro traders are also watching the developments around Iran, what's going to happen there. But yeah, we're being very careful. Look, for now, from the very, very short-term perspective, we're trading below this downside resistance line taken from the high of the 24th of December. We need a clearance of that one in order to go higher. For the downside, a drop below the 1.1618 zone here is needed. If we can clear that hurdle, this is the low of last week, then yes, I think that this could open the door to some lower levels. But by lower levels, I mean this upside line, which is drawn from the low of the lowest point of August of last year. It was a good area. It's a good trend line. I think it can be respected again, but slightly below that we have the 200-day EMA, which could be also could be a nice good um, uh, um, area for support. EUROJPY. This one is, yes, it broke the highest point of 2025 yesterday. We're still above it. As long as we stay above it, I'm going to continue targeting the upside. You know what? Quick glance at Euro GBP. I don't like this pair. Honestly, I really don't. I have like a love and hate or hate and love relationship with it. It's like I don't like it, but I still check it out. And it's like, yes, it's an interesting one because it has a mind of its own sometimes. To be honest, if you've mastered the Euro GBP trade, congratulations to you, ladies and gentlemen. I think you deserve a medal. But yeah, it is moving nicely within the falling channel, because you know what the problem is with Euro GBP from my perspective, kind of, is that it seems like it's very technical. It kind of lures you in because it's very technical. It's like this doing this and that. But then at the end of the day, it just kind of boom smacks you with some unlogical moves and just wow, okay. I mean, you can say the same thing about many other instruments, but this one is just in particular. But anyway, look, it's only my opinion. Maybe somebody else has another opinion on this. For now, this looks like a bearish indication, right? We're still within the falling channel. We're forming something of a bearish flag. But if you're looking for some lower levels, to be honest, a drop below the 200-day EMA, shown as the white line here, is needed. Maybe at the same time, we could fall below the current lowest point of this year, and yeah, creating a new low for this year. Let's see what's going to happen here. Very quickly into GBPUSD. Let's see what's happening here. Again, similar story. We're waiting for this one to make some sort of a move, and that's why I'm taking a very conservative approach here on GBPUSD. And if we do drop below the 1.34, I'll go lower. If I'm looking for some higher levels, for this one, I need to see a push at least above 1.3568. Look, I know it's a big target, big way to go here still. And that's why I'm, being a little bit on the careful side here for now. And I don't, like I said, I'm leaning a little bit more towards the downside on this one. But again, surprises might happen, so I'm not really touching it unless it's gonna start falling below the 1.34 territory and stays below it. Or for the upside, yeah, it's a push above the 1.3568. But then there's another problem, this little downside line on this one. So, go figure. Which could provide a little bit of resistance right here. GBPJPY, just a quick glance, also good result here. Look at this, 213.88. Look, I talked about this before, and I will say it again. I am still aiming higher because look, we're approaching key areas of resistance. Again, look at this, these levels here. This is a monthly chart, by the way. We're near the highest point of this is the highest point of July of 2008. We know what happened after that. It was a big financial crisis. Everything started selling off. But the interesting bit is that GBPJPY was rallying before that, like a year before that, a lot, and hitting 250. And then it started reversing back down. So the market already started understanding that there is a problem. So it's normally like, it just confirms the idea that I keep on saying, and actually it's not my idea. It's just rational expectations in economics, where it takes roughly a year for people to realize that there is a problem. So the problem started in 2007 here. Boom, there we go. And exactly a year later, we started seeing a major sell-off, here, because again, the markets were hit, and yeah, it was crazy. And we saw a major decline here. We saw this drift lower. We found support near this little area right here, near the 118.85. I mean, talk about a drop from, in kind of in a 2-year span, so from 250 to 118. So if we're looking for a similar scenario, I think that, we need to wait for a similar scenario for now, because I think that we're going to overcome these two barriers, the 213.88 and 215.88. But if we somehow stick around here, if we struggle to overcome this and we start falling and we fall back below the 208, to me that would be a bit of a signal, that something is brewing here, something negative is brewing. But again, let's not rush into conclusions. I think that there could be some more upside here. So let's see what's going to happen with this Chinese economy in terms of major devaluation of the yen. But then again, with every parabolic move comes a great opportunity, right? Apart from Turkish lira, honestly, that probably that you should not be touching, or Argentinian peso. Anyway, coming back to the Forex world, USDCAD very quickly on this one. Let me just jump into a daily. So we had a great run already this year, right? I mean, this is of course there was some weakening in the oil market, but now we're seeing a bit of a stabilization moment. So again, if oil does rally, then we could see this pair actually falling nicely, falling to the downside. But again, we'll see which one's going to outpull which. Will it be the DXY that's going to be on the lower side maybe? So we'll see about which one's going to be the weaker one, right? Which one will be the stronger one in a way? So is it going to be DXY, picking up as a safe haven status, or will it be the Canadian dollar if, let's say, if oil does rally? But again, we'll talk about commodities in a bit. USDJPY, good move here. I talked about this. I warned you on Monday. We were, flirting with this area, the 157.90. So there we go. We cleared it. And we tested my other target, the 158.88, and we cleared that one. So my next target is the 160 or maybe the 160.26, which is basically the inside swing low of the 8th of July of 2024. I like that area. Let's see if we're gonna reach that. Because again, further north, around 162, we have the highest point of that July of 2024, because this is when the Bank of Japan intervened to save the currency. USDCHF very quickly pushing higher, just to kind of an example of DXY, but shown in another way. So yeah, we're seeing approaching this downside line. Let's see if we can break that one, or maybe it will provide good resistance. Look, gold. Okay, I need to jump into commodities because I think that this is the topic number one right now. Because look, gold is hitting new all-time highs, right? I mean, looking at the monthly chart here, it's spectacular. The parabolic move, like wow. 5,000, this is what everybody's now talking about, right? Because I think that it's coming more from the silver side, because everybody's talking about 100 level now. So, but I'll get to silver in a bit. With gold, right? Okay, it's a risk, risk kind of hedging against risk. Instrument to hedge against risk, right? You're buying this one because you're hoping that maybe the stock market will drop lower. Maybe you're struggling to go into the stock market. You're trying to find some value. You're always you look at gold and other precious metals. You find value there. And look, I mean, this for now is just one-way traffic. And I mean, look, before I talked about this, and I said that, and I'll continue talking about this, that what comes up must come down, right? We had these moments in history. 1980, 2011, we also hit major highs, after a parabolic move. 1980 was probably the best one at that time. Look at this. If you look at only like 1980, we also had something crazy here, like going from levels of like 150 basically all the way to 800. Wow, that is let's say we take it from the 1976. So in a matter of 4 years, all the way here, there we go. It was, like I said, roughly, okay, not maybe 4 years exactly, but roughly 3.5 years. So in that matter of 3.5 years, we're gaining 775%. I mean, wow, talk about investment, right? But then, of course, we understand what happens. Everybody starts, taking profits. There is a financial crisis. And I'll stick to my words that I said before. I will say this again because whenever times are good, we see the stock market rallying, we'll see commodities also pushing higher because when basically the stock market understand or market participants understand that there's something brewing, but they don't want to, you don't want to sell off the stock market yet. So you're enjoying that moment where you understand that the stock market could sell off, and you're thinking, why I need to jump into the precious metals then when basically I can enjoy, two profits. I can have a little bit in metals and I have a little bit of, in the stock market. And this way it's just perfect run, so everybody's piling up on cash. Everybody's pushing higher. Everything is pushing higher. So once the stock market goes down, I think that it will actually drag precious metals also lower. Now, my reasoning for that is because I said it, like I said, I mentioned this before already, that if the biggest buyers right now are the central banks of major economies. So in general, major economies are the big buyers of precious metals. They're benefiting right now. So if if your economy starts experiencing headwinds, strong headwinds, you need some cash. You don't want to print money, because again, that might cause hyperinflation eventually. Maybe because suddenly you need a lot of money because the money is needed to support your economy. And what are you going to tap into? Something that has been hitting all-time highs a lot, and you have a lot of huge reserves of that. So maybe a little bit of profit taking on your metals. You're not going to sell everything. No, you're just going to sell slowly, and this way, we could see the price kind of stabilizing back down here on precious metals. This is, like I said, a good source of income for governments as well, and you can get some money out of it. And okay, we'll see, of course, how this plays out. But certainly at the moment, wow, 4,600. I think, look, 5,000. It seems like already like a given, right? Everybody's now already like, yes, 5,000, we need that. But to be honest, if we go back into history, we look at history and we look at these major moves when we had these, sharp moves. Like, look at this. Back in 2011, everybody was talking about what? 2,000, right? Also a nice, beautiful psychological number. We reached 1,920, and look at this. Boom. For several years, we have a decline here all the way to, for 4 years, we have a decline all the way to 2015, where it dropped all the way to 1,000, And look, it's an interesting moment here. And I think, like I said, at one point it will be the case. So, long story short, what I'm trying to say is that if everybody's talking around right now about 5,000, it is quite a significant level. Yes, we were talking about 3, 4,000. We could do the same, but I think that 5,000 is becoming this interesting, very, very psychological level. And what I'm trying to say is that we might reach 4,900 and stall. So keep that in mind. It's like I said, to reach the 4,900 from where we are right now, roughly is, let me just drop it this. So to reach 5,000, that would be another 8% to gain for gold right now. To gain 8% for gold, that's not a problem. Gold, gained only this month around what, 8%. So another 8%, maybe going into next month, that wouldn't be a problem. However, to reach 4,900, that's only 6%. So to do 6%, another 6% for gold, I don't think that this is, like I said, a major issue. So that's why I am being very careful here for now, and I should warn all those short sellers that be careful. There is, like I said, there could be some room, more room for further upside. Jumping into silver, ladies and gentlemen, this one is on fire today. It's creating a new all-time high, 91.5 zone, hitting that one. That was just like, wow. I mean, remember where we were back in the beginning of 2025? Around $30. Now we're like tripling that. Wow, this is just major move here. This is a very major move, and honestly, a gain of 200%. Wow, that's that's spectacular. And I think that going further towards the towards the 100 level. If we do go for the 100 level, that would be around almost 250% from, from where we were in the beginning of 2025. So again, also looking at this from the parabolic perspective, look at this monthly chart, right? So look at this. If we are going to go to that 90, that 100 level here, there we go. Let me just put it around here. This is the 100 level, 246% gain. Doable, yes. How far is it from where we are right now? Let's check. So to go to that 100 level, another 10% on silver. Look, silver to do another 10%. Apparently, it's not a problem because look at this. Only this in the beginning of this month. Only in the beginning of this month, we already did 24%. Wow, that's like I said, that's spectacular. In December, we at one point we were gaining around 48%. So to do another 10% for silver and go and hit that 100 level, I really don't think that it's a big problem. So again, silver is also one of those that we need to be very careful about because look, this is a third time in history that we're seeing such a major spike. Back in 1980, look at this. Also, the market was crazy. We were actually gaining around 1,000% from like 1977 or mid 77 all the way here to this area right here. So yeah, this was a crazy move, right? I mean, this is back in 1980 January, and this is where it started selling off very quickly. So and then we eventually we traveled back to this level here. I mean, that was wow. Similar story 2011 here. Look at this. Silver then dropped all the way to almost where it began. So if you're looking at the same logic here, silver might end up traveling back down here towards towards the 30s where it's kind of started. But to be honest, I think I will be a little bit more realistic. Maybe it actually could travel a little bit here, towards the 50s. I think the 50s could be the new moment for silver here, where it could go back to. So if it reaches this 100, and this is the problem, we don't know actually if it's going to reach the 100, or actually maybe it's going to surpass the 100 as well. This is a possibility as well. Don't forget about that. Another little interesting chart that I wanted to show you actually, guys, is gold minus silver. I think it's this one. Let me just put it here. No, not this one. No. I think it's gonna be, yeah, it's gonna be gold against ratio. Yes, in the silver. So yep, there we go. Let me just put this one right. This is the interesting bit. So this is how much it has fallen. So basically, the value of gold has fallen like it dropped from being at one point like 100 times more expensive than silver. Now silver, look how silver has picked up lately. But don't get me wrong, I think this stability might or the situation, the crown of gold might be returned at least soon, in my opinion, again, because this is what happened in this major drop here. This is what I was talking about, this 1980 drop. This is as well a similar story. Boom, then gold, kind of took the crown again. Back in 2011, when we saw silver, parabolic move in silver, boom, also the same story happened here, going from 87 all the way down to 30, this ratio. And then it stabilized again. At one point, then gold was like just wow, flying high. But now, like I said, we're going through the similar thing, and I think that there could be more room for some more downside on this one. Like I said, silver could continue rallying, especially let's say if I think the 50 could be an interesting target, maybe briefly falling below 50. And this is where, like I said, if gold goes for that 4,000, it doesn't reach, let's say, it doesn't reach the 4,000 or 5,000 level, but silver does end up going to the 100 level. Now that's where you will see this ratio falling below 50. So this is interesting. Like I said, this is the another chart that you can take a look at. And I think you need to kind of, you need to kind of keep an eye on this, because this is, like I said, this is very, very interesting right now. And the interesting part is that, can this ratio fall below 50? And like what I was saying just right now, that if gold, like I said, does go closer to 5,000, but maybe fails to reach the 5,000, but actually silver does hit the 100. Ooh, now that's where the interesting bit comes in. So keep your eyes on this. Like I said, it's very interesting. It's only like another, like not full $10 for silver to go higher. I mean, doable, right? So this is the monthly chart. Let's go back into daily. I mean, this is just taking out traders, all those short sellers a lot. Platinum, also flying high. Now, platinum and palladium. Now, these two are very interesting to me as well. These have been flying high as well. Look at this platinum move here. Amazing here. Amazing. Palladium also, let's have a look at this one. Palladium also made a strong move to the upside. Fantastic. Again, I want to do the same thing here with platinum and palladium, this ratio, to find out this ratio here. Let me just do it this proper way. Yep. So, oh, come on. Oh, yeah, there we go. This also this ratio. So we can see that the ratio between platinum and palladium, this platinum continues to win that, but we're approaching a key area of resistance here if we do apply technical analysis on this, right, on this chart. So we're approaching this key area of resistance around the 200-day EMA. Last time we saw similar things, and when we were approaching the 200-day EMA, we stalled a little bit. The 100-day EMA was also a good target, so we kind of see this little stalling moment. But yeah, watch out for this. I mean, in a way, platinum could be also attractive. I mean, it could go further north. Palladium is still on a hold up, but eventually I think this could reverse back down. This ratio between platinum and palladium could reverse back down, meaning that not that the palladium could rally further north. It could be that platinum could take a hit here. Let's jump into copper. Let's see what's happening there. Crazy moves to the upside as well. Fantastic. This one's forming like something like it's showing me as a coiling up moment here. So could be more upside here to come. Sugar. Let's jump into other commodities, softer commodities here. Sugar. I love this one, and actually this is stalling a little bit. So let's see what's going to happen here. I need a clearance of the 15.34 zone right here in order to go higher. But for the downside, I think what I'm going to do here is I'm going to apply this this upside support line. If that gets cleared, I think that more sellers here could join in. And of course, let's jump into oil very quickly. So oil is pushing higher. Now, we understand that oil is pushing higher, and I think that we're watching this very, very carefully, especially, like I said, with the developments around Iran. So if they're going to go and strike, we could see oil actually pushing further north here. There could be, some problems in the supply, in the market supply, because Iran is the number 4 producer of oil in OPEC plus. So if we do see the escalation, with Iran, I think that the market could be shaken a little bit, and we could see oil actually spiking higher, maybe even going back to the $65 mark. But if somehow it will all stabilize very quickly, and this could happen because we saw already, in 2025, we already saw these, attacks on Iran, but then it was a short-lived moment, because they will say that, we punished Iran enough and everything will stabilize again. Because, look, everybody understands the fact that if you're going to, attack Iran, if you're going to cut off China from cheaper oil, that's going to lead to major consequences, and it's going to lead to a market crash. So the question is, you're going to threaten Iran as much as you want, but you understand the consequences to the market. And do you want to be the one that's going to, crash the stock market, or actually do you want to win the midterms? So yeah, it's a tricky question. Whichever way you want to go, let's see, of course. But like I said, keep your eyes on the possible scenario where we could see, an attack. We could see oil spiking higher, but then, excuse me, it could stabilize. very quickly. Maybe they will reach a deal or something like that, and then yeah, then we'll see. We'll see, a moment. If they don't, we could see a moment where price of oil could drift back down. So it could be a great short moment because look, I said it before and I'll say it again. I'm still overall kind of bearish on oil. I am. I think we could still drop below $55. But I think then this whole situation with Iran, I think, could be an interesting moment. So like I said, purely for a speculative moment here. So yeah, we'll see. That's why maybe China is kind of sitting quiet because again, I think they should be, well, they're quiet-ish, but not really doing much because I don't think that there's a major threat. I think that what they're going to do, like I said, they're going to attack. Hit Iran a few times, then they will reach some sort of a deal, and yep, they're gonna back out. And this way, the China will have the flow of oil again restored. That said, if this time is a different one, and maybe the whole point is to weaken China, then if it continues to escalate, then yes, certainly oil could be a problem here. We could see a little bit of a spike higher. But then again, then we'll see what's going to happen with OPEC, other members. Are they going to ramp up production in order to keep oil afloat? Because again, we understand that demand for oil is demand in general, global demand is a little bit on the lower side. Everybody's worried right now. And this could, automatically, despite the attacks on Iran, we could see oil actually eventually drifting back down. So, if, like I said, if OPEC Plus will ramp up oil production, and the supply will be there. So, but the demand actually, because of the weakness, because of all these hits, and everybody will be worried about what's going to happen with the economy and everything, because there's a shakeup happening, and everybody will start spending less. And that's where, like I said, that's where the disbalance could come, despite the attacks on Iran. So, and oil, that's why oil could still drift back down. Again, we'll see. This is theory. We'll see if it's going to play out actually. Natural gas, very quickly. This one is holding above the upside line here from the technical side. Okay, this is all good. On the weekly chart, yeah, not the best, not the most beautiful, but look, not the most beautiful chart, not the most technical one, but still trying. Staying above this upside line, that's great. Let's see if we can break this downside line. If we can, then yeah, I'm going to go to the upside. Ladies and gentlemen, to finish off this long session, I want to jump into Bitcoin. Look at this move, ladies and gentlemen. Boom, to the upside. We cleared. I talked about Bitcoin yesterday. I just threw out a little piece to our VIP clients on this one. We were around 92,000, and there we go. Look at this. I said if we do push and stay above the 94.5 zone, 94,600, then it kind of opens the door to some higher levels. So for now, we're staying above it. So let's see what's going to happen here, ladies and gentlemen. For now, everything is looking quite positive on Bitcoin, to be honest. Bitcoin Cash, this one is less positive, but look, we're going higher. Let's see what's going to happen with this upside line, taken from the low of the 19th of November. If we're going to stick around above it, then maybe this could happen. So let's see if this is going to be the case. If not, then certainly, yes, if we break the upside line, then I'm going to go lower. Ripple also pushing higher. Beautiful move away from this 2 level, psychological 2 level, hitting 2.14. That's great. And I think that there could be some more upside on this one. So let's see what's going to happen here. Ethereum also beautiful move to the upside. There we go, clearing the triangle pattern and clearing the upper side of it. So for now, we're testing the 200-day EMA. If we do climb above it and stay above it, then yeah, 3,450 could be the next target. Litecoin is a little bit on the modest side, but still showing some positivity. So let's see if we can climb back above the psychological $80 mark. Dogecoin, again, beautiful rebound here from 0.1370 to all the way here. That's fine. Yeah, Polkadot also beautiful move. There we go. I talked about this on Monday. I said, look, if we do clear this downside line, it opens the door to some higher levels. Let's see if that's going to be the case. And Tron. Now, Tron is behaving more of a currency like, it has a currency like behavior. And I do like this one. And look, it's not like that disbalancing, mm, other cryptos. I mean, they're not as volatile. It's just kind of doing its job. It's acting, as like I said, it's more like a currency. And at the moment, we're seeing a drop back down. But let's see if this 0.30 territory continues to hold. If it does, I don't think that this is the end of an upside. But if we fall below the 0.30 territory, then I think we'll see a larger correction back down towards this upside support line taken from the low, the 14th of December. Ladies and gentlemen, that is a wrap. Once again, first of all, apologies for the little technical pause during the video here today. Like I said, certain things happen, external things. But thank you very much for watching and listening. I really appreciate your time, your views, your likes, your comments. Join me on Friday. We'll wrap up the week. We'll see what's happening, and we'll probably prepare for some strikes on Iran or something like that. But during the weekend. But again, we'll see. For now. Ladies and gentlemen, thank you very much for watching and listening. As always, stay safe, have your stop losses in place, risk only what you can afford to lose, don't overtrade, and everything will be fine. And I shall see you on Friday. Bye for now.